Alright, gang, it's your boy Nature, aka Nature. Alright, so we went over, we're going over important chart patterns. Alright, so we already ran over double top, double bottom, head and shoulder, inverse head and shoulder, and even wedges chart patterns, rising and falling wedges. Alright, so in our next video, we're going to go over how to trade rectangle chart patterns, okay? We have rectangle chart patterns, triangle chart patterns, which we already went over. Alright, so this is really the last chart pattern, which is rectangle chart patterns, how to trade the breakouts. So, alright, so gang, let's start right now. Alright, so in this next lesson, we're going to learn how to use rectangle chart patterns and how to trade breakouts. So a rectangle is a chart pattern formed when price is bound to by parallel support and resistance lines. So chart patterns are consolidated parallel support and resistance lines and levels. A rectangle exhibits a period of consolidation or indecision between buyers and sellers as they take turns throwing punches, but neither has dominated. Okay. The price will test the support and resistance levels several times before eventually breaking out. From there, price could trend in the direction of the breakout, whether it is the upside or downside. Okay, with rectangles is more indecision. Price can either break to the top or the downside. Okay, so this is the rectangle. As you can see, from the support to the resistance line, it's parallel. Price is parallel. It's going up and down. No gain. It's indecision. The market is consolidating, and it makes a box formation, a rectangle formation. Okay, so in this example, we can clearly see that the pair was bounded by two price levels which are parallel to one another from the resistance to the support line. Okay, when we see this, you can see the two lines. They're parallel to each other. When you see this, we just have to wait until the levels break out and go along for the ride. So remember, when you spot a rectangle, think outside the box. Okay, so that's just a regular rectangle. The regular rectangles are periods of time when price is consolidating and it's parallel from resistance to support. You can see that with the lines. Okay, with a bearish rectangle meaning selling. A bearish rectangle is formed when price is consolidating form during a downtrend. So a bearish rectangle is found during a downtrend. Is consolidating. This happens because sellers probably need to pause and catch their breath before taking a pair any longer. Okay, so it's stuck in a box. Price is just parallel. It's consolidating from support to resistance. And it's found during a downtrend. This is why I call it a bearish rectangle. So in this example, price broke the bottom of the rectangle chart pattern and continues to shoot down. It's a bearish chart pattern, so it's going to continue to shoot down. If you had a short order just below the support level of the rectangle box, we would have made a nice profit on this trade. Price falls from the same height of the resistance to the support, and price, when it breaks this the rectangle box, it continues to fall, and price falls from that same measurement from the previous height by the same height and more. It actually falls a little bit more, so it's a nice profit. Here's a tip: once the pair falls below the support, it trends to make a move that is about the same size of the rectangle pattern, as you can see in this formation. Don't be greedy. Get your money and get out to trade. Wait for price to do something else. In this example above, the pair moved behind the target, so you would have been in a great chance to have catch more pips. So that's a bearish rectangle formation, kind of continuation formation, and it's found after a downtrend. It makes a rectangle formation after a downtrend, so sellers can catch their breath and continue in that direction. Okay, same thing with the bullish rectangle. Here's another example of a rectangle. So you have the regular rectangle, which is just parallel, and it can go either direction. The bullish rectangle, you know, is going to continue going down, and the bullish means it's going up. So a bullish rectangle means it's going to continue going up. So So here's another example of a rectangle. This is a bullish rectangle chart pattern. After an uptrend, the price pauses to consolidate for a bit. Can you guess where price is heading up or heading next? Up. Okay, so uptrend. If you answered up, then you're right. Check out the nice upside breakout right there. Okay, so price breaks out right here. Nice breakout above. Price pops up by the same height and so much more of the previous rectangle box. Okay, so a bearish rectangle box rectangle formation is found after a period of consolidation. Bullish rectangle formation is found after a bullish trend consolidation period, and then it continues and it moves in the same height of the previous bullish rectangle box once it breaks. Okay, so notice how price moves all the way up after after breaking above the top of the rectangle pattern. It continues to move up. Don't be greedy though. Get your profit and get out the trade. If we had a long order on top of the resistance level, if we put our long order on top of the resistance level, then we would have caught some great pips on that trade. Just like the bearish rectangle pattern example, once the pair breaks, it will usually make a move that is at least the same size of the previous range. Alright, so that's a breakout. That's how you trade bullish and bearish rectangle breakouts, and how to identify rectangle formations in the market. Alright, so gang, that does it for all the lessons. We already went over bearish and bullish panics, and we already went over bullish and bearish panics, and we already went over the symmetric triangles. Okay, as far as ascending and descending. Alright, so triangle chart patterns, we went over it. So in our next video, we're going to give you guys a little cheat sheet so you can kind of notice. It's a little cheat sheet to teach you when price is going to move. We're gonna go over that next. Alright, so gang, I hope this video helps. Your boy Nature, aka Nature. Gang, make sure you check out the bullish panic and bearish panic and the triangles patterns, chart patterns. We went over them already. So that does all the chart patterns. Okay, that we're going to go over. Alright, so from the double top to the head and shoulders, to the wedges, to the rectangle chart patterns, to the bearish and bullish panics, even to the triangle chart patterns. So in our next videos, I got some cheat sheet for y'all, so y'all can identify these chart patterns, and you can just keep them in your phone, screenshot them, whatever. Alright, so gang, I hope this helps. Your boy Nature, aka Nature. Gang.